Alright guys, thank you all for coming out. Don't forget, I am not a financial advisor. Okay, this is just for paper trading only. Alright guys, I'm just showing you what I do. I trade paper. Don't cost me nothing but time. Alright, well now that we got that out of the way, let's see what we got here. On this day, it's August 8th, 2022, and we're gonna go to that date. Alright, we're gonna play. We're gonna wait for that 9:30 candle. Okay. So we got a low, pre-market low before 9:30 a.m. and a pre-market high. All of these lines are important. And yesterday's low and high. Alright, so we have the first two candles. We're going to do, we're going to get out our fib and count from 1 to 7. Remember guys? So all we're going to do, count from 1 to 7. Let's see, let's follow this thing. Alright, let's make this bigger so you can see. First two candles, we're not doing anything, we're just watching. You're not doing anything, you're sitting on your hands, so to speak. That's what they say, sit on your hands. Next candle goes up, we follow it. That's all we're going to do, we're just following. Follow the leader. Price and volume is the leader. It goes up, we follow it. This is a 1 minute time frame. I mean, you can use any time frame you're comfortable with. You know, I have 1 minute to follow the candles each time, and that's a lot of time for me. Alright, so we have our first reversal. Now we're going to be looking for what? 1, 2, 3, 4, 5, 6, 7. The big number 7. Between 7 and 8. That's where I take my trades. Or if it's going in that direction, between 28 and 17. Okay, we have a new high. Still not going down. It's a lower low, but also a higher high. All in the same candle. Okay, now we're starting to see some action. It's pulling down past the 50 under my 38. Boom, hit my 70. I'm taking the trade on this candle right there. That's a big candle on my 70. Big volume compared to all these other candles. Look at that. I'm taking this baby up. That's telling me buyers are not playing around here. Goes up. Goes up. And we have a double touch at 10. I'm now thinking, okay, I gotta take my profits now. Hit my 70. There's my 10. My 10 and my 3 is my profits. Woo, there we go. And that's a gap up too. What a beautiful candle. You got to be ready for those double touch. These double touches. I think my 10. The possibility that you could run into some trouble here. But the next candle gapped up. That's why it's good to have more than one contract, so you could sell one and hold one, or sell 5 and hold 5. Because this right here, that's past my 0. That's up to my 31. I'm out. I don't care what happens after this. I am out like Pouty. A beautiful candle. I didn't expect that a while ago. But that's a beautiful trade right there. Hit my 70. I got in. As soon as it hits, this is going to happen fast. So this is why you got to practice this thing. This happens really fast. But as soon as I see it go close to my pull back, go all the way up here, down to my 70, and rejects, I'm jumping in. Now that's a big baby right here. Even if you jump in right here, halfway through this candle, as it passes this open, that open, it's just nice right there. Hit my 7, boom. 1, 2, 3, 4, count to 7. There you go. Anywhere between 7 and 8, I'm in. Look at that baby. Woo. I'm taking profits. I probably have taken some profits here and leave one to run all the way up there. That's the way you do it. And it's still going up. But I'm out. I got my money already. Now we have a reversal. Alright, let's see what's going to happen now. Okay, it's coming back. Reversing, we're doing nothing. We're sitting on our hands. I'm going to flip this round for you guys because I'm going to get you used to only the 7 for now. The 7 and the 8. So we're going to flip that around. We're going to push this up here. 0. It's an up move. So you want to get oh my bad, you want to get your 0 on the top here and the 100 on the bottom. So you could no, that's the way. Yeah, even I get confused sometimes. Well, if you're going to do a down, if you're thinking it's going to go down to be a put from here, then yeah, you're going to wait till it comes down and reverses. But for me, if it comes down to my 20s, I'm taking a trade back up. If it hit the 70 or 80, I'm getting out. If it stops the reverses there. Anyway, let's continue and see what's going to happen. It goes back up. It rejects my 70. See, that's even more money from your contract you got in earlier here. It's still going up. But I'm out. My pocket got my money stacked away already. So I'm good to go. Anyway, it went up. So we're gonna so yeah, so It's still going up, so you're just gonna follow it. All right. You're just gonna follow it. Follow it. Follow it. Follow it. But actually, we need to move this up here so we can do it. I wouldn't recommend that. I would say just leave it where it is. But if we pull back to here, your 20s, and push back up, then it's going to still keep going up. Come right here. Pull back to the 60s and continue going up. See that? And pull back to the 60s. This might be a little bit confusing, but I want you guys only to stick to one number, number 7. That's the only thing you're going to trade for now. El numero 7. And it's still going up. This bad boy is on fire. Let me flip my fib around. I'm more comfortable with it. So yep, bad boy still going up. I think pull back to this. That thing when it was here, right here, I pull back to the 35. There you go, that's my number. And boom, went up. So you see the habits. Pull back to the 35. I guess a continuation trade, but that's not for you guys. We're just dealing with number 7. Right, guys? Dealing with number 7. It's the only trade you're going to take. Okay, now it's taking a break. It's pulling back. What are we looking for? Second touch. Ooh. The second touch mean? It's a double touch here. It's a double rejection right there. See that? Move this out of the way so you can see this. See this? Double rejection right there. That's what they call a tweezer top. So we had a rejection here. These candles didn't even challenge the high. They pulled back, came back up, and we had 2 candles double. This is telling me the market is ready to reverse. That's what it's telling me. But we're not going to take a trade until it's confirmed. We're not taking a trade until it's confirmed, guys. No confirmation. You're sitting on your hands. Come back. I want to see, what I really want to see, it comes under to maybe the 50 or the 40 and rejects my 28. Or if I flip it around, rejects my 70. Okay, nice candle move down to my 28. We're still not taking a trade yet. We're waiting. It pulls back. It came through, touched my 38 and pulls back to my 17. Double candle again. Now I'm ready to trade. I'm ready to start trading this bad boy right here. But this pullback just wasn't enough for me. I want to see it come down to at least my 50 and then pull up and hit my 28. So let's see. Goes down. See, it goes up. Comes down to my 28 again. Comes through my 28 to my 40. Just my 40 again. Just my 40 again. It's not passing the 40. It goes going back up. It's there we go. Here's my 28 rejection right there. Now I'm ready to get into my trade. That's my 28 rejection that I want. Perfect. See that? Long wick off of it. Wick is almost, yeah, it is longer than the body of this candle. That's what I want to see. My rejection, it came down to my 40, rejected my 28. I am getting ready to trade now. Some people might say, oh, but what contract should I take? Well, my advice would be to go to you can take any one of these candles, but you want to take the wicks. Like at the bottom of this wick, it's a 416.58. So you would buy a 416 option to go down, a sell option or a put option. Down here you have 416 again, and you have 416.05, so it's still 416. You have all of these things that you could buy, 415, and as much as 415. So you have a $2 between your price now to buy all the way down here, because this is probably going to come back and challenge all of these wicks. All of these wicks here, price sometime to come back and take out all of those. So let's see, I'm ready to get in now. I want to see one big enough candle. That's not big enough. It's going back up. There we go. Close enough for my rejection. That's my big candle right there. I'm getting in on this candle right here. I'm getting in on this candle. No matter what happens, even if it pulls back to my 21 or my 17, I'm staying in. That's my rejection. Boom. It went up. My 24. I'm still holding. Came back under my 28. Big rejection off of my 28. That's it right there. That's what I like to see. Right back off of my 28 again. Now it has a lot more body to it. Rejected by 28. Try to go up. Boom. Look at that. Now I'm excited because I got in here. It played around a bit. Kind of lost a couple dollars, but look how quick I gained it back. That's my 28. Back in the days, I would have been worried and concerned and sweating like a hog, thinking, oh my gosh, I made the wrong trade. Now, I know that when I get that rejection off my 28 or the 7, just look at it this way. If you're using it in the opposite direction, you're looking at the 7. If you're using this direction, you're looking at my 28. And that's what I do. The 7 or the 28. And if you think about it, 7 is 3 away from 10. 28 is 30. It's 3 away from 0. It's basically the same thing. You know what I'm saying? Just that these numbers, for some reason, over time that I keep using this thing, this number seems to be a number that works very well, the 28. The rejection of this 28 right here. Rejection here, big candle. Rejection here, rejection here. These are all nice, very nice. They just had to go back and kick these people out who bought puts here. They went back and took them out. And the people who even bought puts here too. They went above these two red candles right here. 1, 2. Hit that 417.08. Now, why would they want to start 417.08? Obviously for a reason, and that reason is to kick all the people who bought put options here or sell short here. And this is why now even all of these people who bought down here got afraid. They got afraid and they jumped out and it went back up here. So now all of this shares are flooding the market and they're just buying it up. They're buying it up to sell it back to the same people. It's crazy. But anyway, we're in. I'm holding. Okay, there we go, below my 50. Come back, check my 40. Coming back up. Check my 38. It's coming back up. I'm still holding. Check my 30. above my 35. I'm a little concerned. It's close to back to my 28. It's going to be my second hit. No, it would be my third hit off of my 28 if it's gonna do that. Let's see. But I'm still holding. Boom, rejected. So it didn't go close to my 28 as it did over here, but it rejected here. So I'm still holding. I'm almost at break even here. And here we go again. Boom. Wow. That was unexpected. You don't want to see that when you're trading. In a trading, you see something like that. Yeah, that would shake your nerve. But I'm still holding because it's still not to my 20 yet where I got in. Okay. Whoa. Past my 28 to my 21. I'm still holding. I'm down a few dollars. Maybe 30%. But I'm still holding. It's rejecting my 21, which is just why I have these three numbers here. The 320s here, because this is just a area. There's no perfection in trading. What's my high over here? It is 417.62. A little bit higher. There we go. So yeah, so it rejected. It didn't go to my 21. These are why I have these three lines here. This is where I trade, and I know sometimes it's going to pull back to my 21, but that's okay. Sometimes it don't at all. Like it over here, it just moved away with this big candle. Normally you get another big candle, but it pulled back, and that happens. Now you can jump out if you're not sure. You can jump out on the 17 and say, okay, well, I don't want to lose all my money. You get out of the trade here. That would be your stop loss, and that would be my stop loss too. If I see it hit the 17 after, and I know all these candles, I'm getting out. I've suffered a loss, but that's okay. I live to trade another day. But let's see. Okay, back under my 24. Price closed under my 28. I'm happy again. Rejected my 28 on a green candle. Passed through it again. Whoa, passed through my 17. I'm out. Yep, I'm out. I'd have to wait till it comes back through my 28 before I get back in. But I'm definitely out here. Lost some money. But if it rejects the 10, then it's still not gonna go and challenge the high. Let's see where we are. Yep, so the 10. Just keep in mind, if you had gotten in here, you would have made your 20% on this big candle. Alright? And I probably would have sold, if I had two contracts, I would have taken one out and probably lose that 20% back on the other one. So let's see, okay, I have rejection at the 10, coming back to my 28, boom, reject my 28, I'm back in. I'm back in again. We fall down, we get up, that's what we do. That's right, we fall down, we get up, that's what we do. 62, there you are. Yeah, so we're back under my 28, we're back in motion. You see how the market works? You just don't know what they're going to do next. It rejected 28 nicely right here. You get in. You got a couple dollars here. A couple dollars here. It took a couple dollars. Then it came down and gave you your 10%, 15% on this candle. That's within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes right there. You make a 20% on your money. You will never get that from a bank in 1 year. So anyway, if you held, you would have gotten out here and lost a couple of dollars. And then it rejected my 10 or maybe 15, no, maybe 13, between 13 and 10. And then it just went right back under my 28. 3 candles, big candles down. That's a 30 cent move on a 1 minute candle. That's average. This candle at 51%, that's not average. 43 cent, that's not average. 28 cent, that's pretty much average for the algorithm. But when they do big candles like this, something is up. So here's a warning. You see 6K in volume, over 40 cents, almost, close to 50. Change the direction. This one is 61 cents. See that? These are the candles at 43 cents here. 39, 40 cents here, almost 14,000. So this is a volume and price movement. That's good. This one has volume and price movement. These are the candles that tell you where they're gonna, if the candles are gonna keep going up. And this one had big price movement, not as much volume. And then it went up a little, came back, and then went up to a new high. But anyway, we're back in the trade over here. All right. And let's see what happens. Boom. Oh, sweet. I got back my money that I lost. We're going to play this game again. Nope. Let's see. Under my 50. Test my 50. Went above it. Test my 40. I'm still good. It's at my 40. I'm okay with that. Test my 40 again. Test my 40 again. Stay below my 40. Hit my 40 again. Now I'm feeling good. Went through my 40. But it closed below the 40, my 43. Wonderful. That's what I like to see. Closed below my 40 right there. Let's move this over. Let's continue. Hit my 50. Below my 50, I'm still in. My second trade, I lost a little bit on the first one, but I got in on this one right at my 28 again. I'm not playing around. Going a little bit sideways here. Still going back up. Past my 40 to my 38. Coming back up to my 35. It's pretty close to my 28, but I'm still hanging in there. Boom, hit to my 28. Let's see if it's going to do it again. Hit my 17. Rejected on my 24. Boom. You see how nerve-wracking this can be once you're in it? Your money's all over the place here. You gotta not focus on the money and focus on what's happening with the trade. You got to stay focused, because now I'm in the negative again because I got in on this candle somewhere and the price is above it. It came down, pushed down to here, but it's still price is above it. And I'm doing the same thing. If I get it on my 28, I'm going to get it on the 17. So I'm still holding. This is reality of trading. All that fancy stuff they show you on TV and telling you how wonderful it is, it's not all that wonderful. You got to decide for yourself what you want to do. And you got to get comfortable with that. Comfortably enough to not be nervous and be a wreck of high blood pressure. But I'm still holding. I still didn't hit my 17. Coming back down again. Back below my 38. Okay, testing my 38. Below my 43 again. Come back up and test. Man, this is tough thing to go through, because each time you see they pull it back like that, your money is just swinging back and forth like a seesaw. Them contracts are swinging back and forth like a seesaw. But that's okay. I'm holding because my 28, I know it works. And I am taking profits somewhere down on my 80s right here. That's where I take my profits. My 28 to my 80. From my 80 to my 20. Okay, now we move in. Come down. Check the 61, which is a very famous number, 618. Boom. Ooh, I like how we went through that 618 really fast. I know we got some momentum here. Wow, now we're running. I'm about to get out. Boom, I'm out. See that? And if I had more than one, I'd leave one in. I'm out though. All of this back and forth still probably landed me somewhere maybe 1.5, 150%. So if I buy a contract with 70, I would have had $170, roughly 175, somewhere around there. I try to buy contracts between $70 and $100, so I would have made 130 on this trade, roughly. And then I have another one in there that's still going, which it's another 70. That's also at 130, but I'm leaving it to see if it's going to go further to my 100 down here, or to my negative 35, negative 31. Let me flip this bad boy around. And that's my target now. See, it's the same thing up here. You see that? It's a 70 that it rejected. 78. Right up to my 70. See that? My 70 line. Still the same thing. Let me show you. Right here. See that? That's my 70 line. Same thing as my 28. I told you. See that right there? That's my 70 line. That's where I got it on the first trade. It went up, it pulled back, and it came up to the 78 above, and then pushed. I got out here, I waited, and got back in when it got back underneath the 70. It came down, and I'm still holding. It came back up above the 70 again. And that was it. Man, it's been half an hour already. Time flies so fast. And then it came all the way down here. And I'm still holding. I got two. I sold one right as it hit my 80, which was up, which I flipped around. So now it's my 20, 80, 20. You know, it starts at 80, I get out at 20. That's how I do it. 80, 20. I get in on the 70, but profits are 80 or 20. Like, if I'm coming from the 80 side, I'm getting out on the 20s. Furthest I'd go to 17 and get out. And if I have a one runner, they call a runner, that you leave it in there to see what's going to happen. I don't mind losing it, because even if I lose it, I still got $30 profit. If I lose that $70, it's 100. It's like two of them, right? And you made $260, but you sold one, so you have $130 profit in your account. You still got one running in there. Now you're just gonna leave it and see what happens. Okay, let's see. It's pull back, and it comes down, pulls back, big candle right there. Let's move these lines over. That bad boy is running right to my 31. See that? I wouldn't even have gotten out here because it flied right through there. So I would still have been holding. Okay, there you go. And right back to my 50. So this here, 73. I would have probably gotten out here, more than likely, as it passed my 30. Because I don't really like to go beyond here when I'm trading. So I would have gotten out there, no matter what happens afterwards. But it comes back up, let's see what happens. And it comes up and it plays around. Ooh, it came right back down. Now you could have actually come out of this here, draw another fib, and this would have gone back to your 66. This would have been the 66 area, 618. You know what I'm saying? This would have been. This is going to look a little confusing for you guys, but let's just see. This would have been the. This would have been the 618. Let's flip it around. Yep, see that? That would have been a 618 trade, which means you would have drawn your fib, wait till they come back to the 618, and that's it. So that's a continuation pattern right here. Continuation pattern. What you guys need to study with stuff like this is the candle, the volume, and the price move. Because the more you see these candles and become used to them, you'll come to realize that you're gonna be looking for them and using them as clues as to what might be happening. So that's a big move right there. Oh my goodness. If you had more than one or three of them and you sold one here and hold on for another one, man, you're up 200-300% right now. Because that's over 100. You went from 100 to 0 back to 100 in the opposite direction. So yeah, you made some good money if you held on. And it's still going down to 150%. Nope, almost there. Most people don't hang on for that long. Very rare that happens, but that's crazy. I'm gonna show you guys how. Now remember, this is August 8th. Okay, we're gonna look at a trade that was that you could have taken and what it would have cost you and what the results would have been if you'd held on. All right, so let's do that now. So here you have this trade. This is same day, 8/8 at 11:08 a.m. right there. If you'd bought a $412 put on the SPY, it would have cost you $9, $10 high, $10. All right, pay attention to this. This is Yahoo. This is free information. You can't even Yahoo Finance. So nobody can hide this from you or trick you. You just go to Yahoo Finance for free. You go to put SPY or whatever chart you're looking at and go to options. And you'll see all of this stuff. Actually, you can use trend lines and all. So you see it on 8/8 to 11:08 a.m. If you're going to go back to the charts, it costs $10 at 11:08 a.m. and now this one is at 11:08. This is 12:36. This is 1 hour and a half later. That same one that you bought for $10, you would have sold it for, let's see, you would have sold it for roughly $8 to $9. Let's say $80. You bought it for 10 over here and sold it for $80. That's one contract. How much percent is that? That's 700% on your money. So you spend $10 buying the contract and you sold it for, we're gonna be real here. We sold it for $80, even though it says $8 to $9, and it probably even went more than $8 to $9 on this other candle if it went a little bit higher. But if you had held it for 1 hour and a half, 1 hour and a half, from $10, you would have sold the same contract, 412 put, on the same day. SPY with the same number, 412. I can't hide this information. 412 right there. That's Yahoo. Can't hide it. You know what I'm saying? Even though it's telling you a negative 95% change, that's negative 95% from where it opened yesterday. So don't be fooled by that. That's negative 51% from where it opened. It opened and the stock went up first. Remember in the morning? So yeah, it recorded that, and then the stock came down. And as the stock went up, the puts price goes down, and then the cheapest part of the day was $10. The most expensive part of the day, $89. So even if you had bought it for $10, $12, you're still selling for $80. You bought 10 of them for $100. You're talking almost $800 in profit right there. You buy 100 for $1,000. You're talking $8,000 in profit. See what I'm saying, people? Now, keep in mind, let's go back to the chart. That's 11:08 here and 12:36 you're out. So 11:08. So let's see. 11:08. Right about here. If you bought on this candle below the 70, see that? That's right after the candle that rejected my 70, just like I told you guys. Or if I flip it around, the 28, whichever one you want to use, I don't care. If I flip it around, it's the 28. If I flip it this way, it's the 70. But for me, I'm flipping it because I want you guys to only use 70. I don't want to confuse you. Just use the 70. You know, it rejected the 70 a couple of times and went through, but I wasn't concerned. You know, I was willing to hold. And this is why it's sometimes good to buy more than one. If you can buy 3 at least. Because then you can sell one for a little profit, get out, hold on to the next 2, and if it pulls back, you're going to lose some money, but you just got to wait, because you're going to see where it's rejecting. It's rejecting. I'm going to give you some other clues in the next video as to how to help you with this rejection, to not make you so worried. Alright, so in the next video we still have to go over some of these indicators. So you're just going to use a 7, that's it. You're going to spread this thing out from the lowest point. Now this one we traded already, so you're going to move it up to here. You're going to move your 0 to here and your 100 to here. You're going to wait for it to pull back, hit your 70 and go down. That's it. Hit your 70 and go down. You're not going to trade unless it pulls back and hit your 70 like it did here. And it did here. This was my first trade. It pulled back, came down here. I would have taken profits here without a doubt. My 20%, my 15%, and then I would have held another one. But I probably would have gotten out here when it went past my and hit my 80. But definitely, I would have gotten back in here when it went below. And even though I get back in here, it still comes down, which I would have sold. I would have sold again because it rejected it before, I would have sold it here right away because of these two rejection prior to that. And then I would have waited for it to come back below my 70 again and then get in. And then I would have bought on the third try, I would have probably bought 2 or 3 of them and just held on and sold one. I would have sold one here. I would have waited, probably sold another one here, close to my 31, and then just held the other one, which would have net me some a good return. $70 would have net me probably like $500. $10 to $87 would be $500. Yeah, roughly. $70 would have given you $500 on one trade. You know, if you had bought them from up here, sold one here for about 100 and something, sold another one here for almost 200, and then sell the last one for about $500 down here. Now this is just $210 that we turned into roughly $800 within an hour and a half. So I'm saying, people. So if you don't know which contract to buy, you can buy any one of these numbers down here at the bottom of the wick. If you don't know, I would suggest that you buy something between $70 and $100. You're not going to know that you can buy a $10 contract on a day like this because you don't know that they're going to move the market like this. If you think that they're going to move the market like this, then yeah, but under normal condition, when you buy a $10 contract, you're losing that money faster than you can say amen. I'm not even kidding. Been there, done that. I've lost so much trying this cheap contracts that I can't even tell you. But I find consistency with this. You know, out of every 100 trade, if you win, let's say about 25. If you win 25, just from this following counting to 7, you're just going to put your 0 here, your 100 at the top, pulls back, wait for it to hit the 7. Take your profits at 10, and if you have another one, you can take it at your 31. I mean, it's all up to you. You can decide for yourself. You can take it at negative 73, and you can take it at 100. It's all up to you. But you see where your for yourself how this is possible, and not very difficult if you are able to follow rules. That is the question that you're going to have to answer for yourself. Are you capable of following the rules? Don't look at where the chart is moving. Don't look at how much money you're losing or winning. Just look at the chart. That is where I got in trouble a lot. I kept looking at the money I was making or losing, and I kept missing out on a lot of opportunities because of that. And when I really stopped looking at, you know, you make your trade, just forget about it until you decide to get out. Then you look at the trade again. In the in between time, you're going to be looking at the numbers that we've talked about. You know, you can't hide. I shoot for my 20 to 30%. And of course, on this day, this is why it's nice to have more than one option, you know, to purchase. And even if you look at this, all right, look at this. You have your 100 up here, you have your 0 down here, and then there is a trend line that comes with the fib. See that line that goes across there? It's a trend line. If you notice, after it broke that trend line, it just went down. So you can even wait till it hit the 50. But I don't want to confuse you, so let's just stick with our 70. You're going to stick with your 70. You get in under your 70 right here, and you get out at your 10 for your 10 to 20%. That's the safest trade you can make. Vice versa. If you get in on the 20, you're getting out on the 70, or 20, 80, 80, 20. So if you are below 80, you're getting out on your 20, like 17, 20. If you're above 80 and there's a strong rejection, it will go long. It will go down heavy. But you're going to have to learn from practice and watching what happens and decide for yourself. So you got to paper trade this. Keep paper trading. You know, get to learn it. So that's the trade that I'm showing you today of how it could have worked out. And you know, I'm gonna put links if you want to use Robinhood or TradingView or TD Ameritrade. That's actually what I used to trade, TD Ameritrade. And you can open a cash account. That's what you're going to open. You're not going to open a regular account. You're going to open a cash account. Because if to open a standard account, you need to have $25,000 or more. So you're going to open a cash account, and you're going to take these trades. All you need to start with is $100. And if you follow the rules, you should be okay. If you're going to buy a contract, if you don't know which one to buy one for $70. And if it pulls back and you lose some money from your $70, it's okay. You're going to have to wait for another day to trade again. You know, you're going to miss out if you only have $70 to trade in that day. Of course, having $250 is even better, because then you could have bought 3 $70 contracts. You know what I'm saying? If you want to trade the $10 contracts on these, I wouldn't suggest you trade the $10 contract on the 70 to 20 or 80 to 20. Because with a $10 contract, not many people are going to buy them. The only time those work is if price goes to that number, to 412. You see over here we started at 417. There was no guarantee we were going to reach 412. We started at 417 and we went all the way down to 412. That's not something that's gonna happen every day. It's just not. So if you think you're gonna be trading those cheap contracts to make money every day, it's not gonna work. If you trade a $10 contract on a regular day, for it to move from 70 to 10, you're just going to make $1 or $2 if you're lucky. Because for some reason, the algorithm that they use will take $8, $9 before it even give you that $1 for some reason. Some Black-Scholes formula that they use. And there's a lot of other things that you need to become aware of. As I said, you need to become aware of the volume. You need to become aware of price movements and the type of candles. And those things we're going to go into in the next video. Alright? So, thank you all for sharing the video and watching the video. I appreciate it. It's simple strategy, and I mean seriously, if you can count from 1 to 10, that's all you're gonna do. You're gonna put it at the low of this candle. Why this candle? Because it's higher than the last one, and then you're gonna put it at the highest high. If this goes higher, you're gonna move it up. If this goes higher, you're gonna move it up. You're just gonna keep moving it up. Okay, and that's it. If you let's say, for instance, all right, let's do something else. Let's say you just came in from outside. you didn't see all of this stuff. You don't know where to start. You're like, okay, where should I put this thing? Where should I put this fib? Well, I would suggest that you do the same thing. You're either going to put it at this low, or this low. But here's the thing. With this low, you have a lower high. I don't like to use it here. I would rather use it from the last highest high to where it's had the highest low. Not the lowest low, the highest low. Alright, so it's obvious that this was a big pullback here. And it pushed all the way up to here. Now this is a pullback. With this pullback, I wouldn't put it here. Why? Because on this first pullback, it started to move strong. Look at the size of the candles. And even after this little pullback, it moved 2-3 candles really strong again. So I would keep it right here. I mean, in all honesty, it will work no matter. Oh, come on. All right, let's try this. Oh, there we go. So you put your 0 here, your 100 here, and what are you waiting for? You're waiting for it to turn around and hit number 7. Anything between 7 and 8. That's what you're waiting for. That's all you're waiting for. Alright. And in the next couple of videos, we're going to add some moving average lines, like this line, to help you decide. This obviously, you could see the trend that it was riding. It stayed above it, Oh, the market is over. And then it came below it. And went above it, below it, went above it, and then came below it, then went above it, and then came down. Look at that. Look how it rolled that line down. Oh my goodness. Even though I showed you without these lines, if I had these lines on the chart, I would have made different decisions, because I would have seen what it was doing and understood that, okay, I'm staying in. I would have made different decisions. But I'm trying to keep it simple for you guys. I don't want to complicate it too much for you guys. I just want to keep it simple so you can learn. Practice and practice. And what you're going to do after your practice? Practice. And when you become perfect, what you're going to do? You're going to practice. But there's no such thing as perfect. No, only my Father in heaven is perfect. There's no other perfection. I don't care what anybody says. Fortunately, even for us, God made us perfect, and we screwed that up. And now we get sick and we die. We get old. So anyway, I'm just gonna practice. All right. Yeah. Thank you guys, and I hope that you guys really learned from this. And of course, any questions, just shoot them in the comments. I'll do my best to answer them. All right. Just keep watching the video. Keep just doing what I tell you to do. Just count from 1 to 7. Set your 0 here, your 100 there. Wait till it hit the 7 and reverse down. If you have it the other way, you're going to wait till it hit the 28. See that? 7 and the 28. Same number for me. Either direction. My 24, my 81, 85, my 90. My 24, 21, 17, and my 10, 90. Same thing. This 10 is 90. This 28 is 70. And the 21 is 80. So you see, it's just same thing. The 17 would be 85, 87. So I can use mine anyway. I'm just trying to keep it simple for you guys. Just use number 7. Okay? That's all, folks. God bless. Thank you for sharing. Thank you for liking. Appreciate it.